So coming to salary, the basic point is charging section. First, method of accounting, as we know, method of accounting, due or receipt basis, whichever is earlier. Once it is taxed on due basis, again it will not taxed on receipt basis. Once it is taxed on receipt basis, again it will not taxed on due basis. That is section, that is a charging method of accounting. So to check whether any payment is it taxable under the head salary or not, we have to check for the relationship. The relationship between the payer and payee should be employer and employee. Any amount paid by the employer to employee will be taxable under the head salary. So in this process, we will verify few issues. That is, salary received by partner from partnership firm is taxable under PCBP as there is a lack of employer and employee relationship. And executive directors or whole-time directors salary is also taxed under salary because they are employees only. Non-executive directors or independent directors, they are not employees at all. They are not employees at all. Whatever money that will be taxable either PCBP or other sources. And then sitting fee is taxable under the head PCBP or other source as you wish. Usually it is taxable under the head other sources. Maybe you can tax under PCBP also, no problem. And if chartered accountant appointed as a retainer is not an employee at all, whatever amount received will be taxable on the head PCBP. And pension to retired employee. Pension to retired employee is a taxable under the head salary because the relationship may be a present, past or future. And family pension is taxable under income from other sources. Salary to judges is taxable under the head salary. And teacher of the college for checking answer sheets of a college is taxable under the head salary. Teacher of a college for checking answer sheets of the university will be taxable under the head income from other sources. And remuneration to MPs MLAs is taxable under the head other sources. However, allowances received by MPs MLAs will be exempt under section 10 subsection 17, and overtime salary also taxable under the head salary. And after that, how to compute the salary? So we need to take basic DA, commission, bonus and all. After that, we have to add perquisite, allowances, retirement benefit. Then we will find out the gross salary. From that gross salary, we need to deduct 3 deductions: standard deduction, entertainment allowance, professional tax. Then we will arrive the net salary. Okay. So move on to the perquisites. Coming to perquisite, domestic servant. Domestic servant provided by the employer, it will be taxable. Provided by the employer, it will be taxable only in the case of specified employee. Provided by employee, I mean appointed by the employee, it will be taxable in the hands of all types of employees. And the way of computation of the perquisite, salary paid by the employer minus amount recorded from employee. So what about gas, electricity and all? So gas, if it is procured from the own resource, I mean if it is provided from the own resources, cost of manufacturing minus amount recorded from the employee. Cost of production minus amount recorded from the employee. If it is procured from any other person, amount paid to third party minus amount recorded from employee. So in whose hands it will be taxable? That means it will always depending upon the connection. If connection is taken in the name of employer, it will be taxable only in case of specified employee. If connection is taken in the name of employee, it will be taxable in the hands of all employees. Then education. Coming to education, and education training of the employee is not taxable. If a fee reimbursed, fully taxable. If a education is provided own institute or a tie-up institute, cost of education provide to children, cost of education 1000 rupees per month per child, nothing is taxable. If cost of education more than 1000 rupees, then we need to compute the perquisite. That is the cost of education in similar institution minus amount recovered from the employee. And if education facility provide to any other person, then there is no 1000 rupees per month per child exemption. Directly cost of education in similar institution minus amount recovered from the employee. And then coming to the health facilities. Health facilities, 5 situations is not taxable. Other situations, whatever situation is taxable, like government hospital, own hospital, COVID, notified diseases, and medical insurance premium. These 5 are not taxable. All other medical facilities, medical premium, medical allowance, all are taxable. Even medical facilities provide outside India also taxable, like treatment expenses and accommodation expenses exempted with attendant as permitted by RBI, and travel expense also exempted provided your gross salary is not gross total income is not more than specific limit. That specific limit are not yet notified. That will be notified in future. We will discuss later. Okay. Next, move on to the car. When it comes to the car, we have to check who is the owner of the car. First, we'll think about the car owner is employee. Car owner is employee. If car owner is employee, car owner is employee and employee expenses also met by employee, there is no concept of perquisite. Car owner is employee. Car owner is employee and expenses met by the employer. User for official purpose, no perquisite. User for personal purposes, next expenses incurred by the employer minus amount recorded from employee. Official and personal purpose, total expenses by employer minus 2400 or 1800 per month, minus 2400 or 1800 per month, minus 900 per month if driver provided, minus amount recorded from the employee. Up to 1.6 liter is a small car. Beyond if greater than 1.6 liters, big car or 1600 or cc. Case understood. Then if car owned by the employer, expenses met by the employee. Expenses met by the employee. Official purpose not taxable. Personal purpose 10% of actual cost of the car minus amount recorded from the employee. If car official and personal purpose, then 600 per month or 900 per month plus 900 per month if driver is provided. So then car owner is employer and expense also met by the employer. Official purpose, nothing is taxable. Personal purpose, 10% of actual cost, expenses incurred by employer minus amount recorded from employee. Official and personal purpose 2400 or 1800 per month plus 900 per month if driver provided. This is about car perquisite. Got it, everyone? Move on to the rent-free accommodation. If accommodation is provided by the government employee, license fee specified minus amount recovered from employee. Private employer own accommodation. Employer own accommodation. 10%, 7.5% or 5% of the salary minus amount recovered from employee. That 10%, 7.5% or 5% depending on the population. If a population is 15 above 40 lakhs, 10% of salary. 15 lakhs to between 40 lakhs, 7.5. Other cases 5% of the salary. And rented accommodation. Employer hired accommodation. If employer provide accommodation, hired accommodation, 10% of salary or higher charges paid, whichever is lower. In hotel, higher charges paid are 24% of salary. In all cases, we have to reduce amount recorded from the employee. Here salary means basic DA forming part of retirement benefit, commission, bonus, taxable allowances, fee, any other monitor payment. You need to add 7. Okay, na? Got it? Next. After that, furnished rent-free accommodation. In case of furnished rent-free accommodation, we have to add value of furniture, unfurnished plus value of furniture. Then you will arrive the furnished accommodation. So value of furniture. How to add value of the furniture? If it is owned by the employer, 10% of actual cost. If it is hired by the employer, higher charges paid, less amount recorded from the employer. And if 2 accommodations are provided, in case of transfer, in case of up to 90 days, only one rent-free accommodation taxable. After 90 days, both will be taxable. In case of transfer, if accommodation is provided in hotel, up to 15 days, nothing is taxable. Okay, next. After that, concession interest loan. Concession interest loan, that is a MOMB, maximum outstanding monthly balance at the end of each month, into SBI lending rate as on the first day of the previous year minus amount interest charged by the employer. If it is a petty loan, that means loan up to 20,000, nothing is taxable. If loan is for a specific disease, not taxable, provided if it is reimbursed by the employer and any other insurance company, then it will be taxable. Then use of mobile property. Coming to use of mobile property, laptop use not taxable, and any other asset 10% of actual cost, owned by SSC, hired by higher charges paid. Got it? Next, in case of sale of mobile property, if it is a car, we have to take actual cost minus depreciation 20% written down value method on completed years minus amount recovered from employee. If it is a computer, actual cost minus 50% depreciation WDV method on completed years minus amount recovered from employee. And if it is any other asset, Actual cost minus 10% depreciation on SLM method for completed years minus amount recorded from employee. So tour is nothing, guys. Tour is all this, nothing. Next, lunch facility also. Lunch facility, rural area not taxable, snacks not taxable. Any other pays. Total cost of the lunch minus 50 rupees per meal minus amount recorded from employee will be taxable. If you opted default tax regime, nothing is taxable. Voucher also, cash gifts always taxable. Other than cash gift, up to 5,000, nothing is taxable. If a value of the gift is more than 5,000, total amount will be taxable. And club facility and credit card facility for official purpose is not taxable. Personal purpose is taxable. Other perquisite, telephone allowance is taxable. Telephone perquisite is exempted. Coming to allowances, we have basically two types of allowances: exempted allowances and taxable allowances. Coming to exempted allowances, like sumptuary allowances, sumptuary allowance to High Court, Supreme Court judges, and compensatory allowance to High Court, Supreme Court judges, and allowances paid by UNO fully exempted. After that, we have to think about 10 subsection 14 clause 1A, 10 subsection 14 clause 1, 10 subsection 14 clause 2, and 10 subsection 13A HRA exemption. Yes or no? 10 subsection 14 clause 1, we have 6 allowances: TA, DA, traveling allowance, conveyance allowance, daily allowance, helper allowance, uniform allowance, academic research allowance. These 6 allowances are exempted provided if they are used for official purpose. Then 10 subsection 14 clause 2, 10 subsection 14 clause 2, that is 10 subsection 14 clause 2, tribal area allowance 200 rupees exemption per month exemption. Children, person who are working in a transport system like drivers, 70% of allowance are 10,000, whichever is lower. And then children education allowance 100 rupees per month per children, maximum 2 children. Education, hostel 300 rupees per month per children, maximum 2 children. And then underground allowance 800 rupees per month. And then handicapped person 3,200, 3,200 commutation between the office and home, 3,200 per month. These are 10 subsection 14 clause 2. Then HRA. Coming to HRA 10 subsection 13A, maximum 40% or 50% of the salary. That means if you are working in metros, 50%, otherwise 40%. Metros means Delhi, Bombay, Kolkata, and Delhi. And maximum. Coming to actual HRA and formula, rent paid minus 10% of salary, whichever is lower is exempted. Here salary means basic, DA forming part of retirement benefit, commission as a percentage of turnover. This is how we calculate HRA allowances. Then move on to, there is a small concept here. Leave travel allowance also there here. Leave travel allowance, how many times you can, for you, your family, your children, we can go for a tour. Whatever traveling expenses incurred by the employee, if reimbursed by the employer, fully exempted. This benefit is available out of 4 calendar years only 2 times. If you are not able to avail these 2 times, you can have a facility to carry forward to another block. Only 1 time carry forward is possible. Here one clarification: children's, only 2 children are eligible for this exemption, and everything are short route and economic class. 2 children means multiple, in computation of 2 children, multiple children born out of after first child, multiple children born out of after first birth is treated as a 1 child only. Got it, everyone? Next, only travel expenses reimbursed only exempted. If the employer reimbursed any other amount beyond the travel expenses will be taxable. Then move on to the retirement benefits. Coming to gratuity during the service fully taxable, and at the time of retirement, if it is received by government employee, exempted, fully exempted. Received by private employee, non-government employee, covered under Payment of Gratuity Act, maximum 20 lakhs, actual formula 15. Covered under Payment of Gratuity, in case of covered under Payment of Gratuity Act, formula is 15 by 26 into last done salary into completed years of service. In excess of 6 months also treated as a full year. Here salary means basic plus DA, all types of DA. If it is not covered under Payment of Gratuity Act, formula will be changed. Then 1 by 2 into average salary, average of last 10 months salary into completed years of service. Part of the year should be ignored. Here salary means basic, DA forming part of retirement benefit plus commission as a percentage of turnover. Got it? Then after that, to 20 lakhs limit, if any employee, after death of any employee, if their legal heirs are widow of employee receive any gratuity, that is also fully exempted. In case of seasonal establishment, we have to take 17/26 instead of 15/26. In case of piece rated employee, we have to take average of last 3 months instead of last on salary. Got it? Okay. And this 20 lakhs limit is lifetime. Even if you are getting gratuity more than one employer, you are eligible for exemption only 20 lakhs. Then move on to retrenchment compensation. Nothing. Then pension. Retrenchment compensation is nothing but layoffs. In case of layoff, any compensation paid, there will be exemption under section 10, subsection 10C. Maximum 5 lakhs, actual amount, formula 15 days salary into complete years of service in excess of 6 months. And then pension, uncommuted pension always taxable. Commuted pension, if government employee, exempted. And non-government employee previously received any gratuity, 1/3 into commuted pension divided by percentage of computation into 100%. Not received gratuity, 1/2 into commuted pension into 100%. And 1/2 into commuted person divided by percentage of computation into 100%. Got it? Then move on to the leave salary. Leave encashed during the service is taxable, and leave encashment at the time of retirement, government employee exempted fully. Non-government employee is there is a exemption, that is a maximum 25 lakhs. Another maximum also there, that is 10 into average salary, actual leave salary received, and formula unutilized leaves divided by 30 into average salary. Here salary means basic DA forming part of retirement benefit, commission as a percentage of turnover. Unutilized leaves means leaves granted minus leaves utilized. Maximum leaves granted per year is 30 days only. Leaves granted minus leave utilized, you will get unutilized leaves, and unutilized leaves divided by 30 into average salary. Okay. Then voluntary retirement. In case of voluntary retirement, you will get exemption under section 10(10)(c), and maximum 5 lakhs. Actual formula, past formula, and future formula. Past formula, last done salary into 3 months into complete years of service. Future formula, last done salary into remaining months of service. Whichever is lower will be exempted. And PF. And coming to PF, we will discuss one by one. Statutory Provident Fund, I will explain one by one. Coming to Statutory Provident Fund, employee contribution 80C. Employer contribution will be exempted. Interest also exempted. Amount withdrawn from SPF also exempted. Coming to the PPF, any amount contributed by any person, because it is open to all, no? Public Provident Fund. Employee, any amount contributed to PPF, 80C, interest exempted. Amount withdrawn also exempted. And any amount contributed to RPF by the employee, 80C. Employer exempted up to 12% of salary. Interest also exempted, 9.5% of salary. Amount withdrawn also exempted, provided continuous period of 5 years. Maybe sometimes due to discontinue of the employer business, or discontinue of employer business, or due to closure of due to health problem of employee, or any other reason beyond the control of the employee, in that case also exempted, even you are not working for 5 years. But other cases, at least you need to transfer to new recognized provident fund of employee, or maybe NPS. If you are not transferred to any other RPF or NPS, then it is taxable. Okay. And unrecognized provident fund. Coming to unrecognized provident fund, there is no ATC deduction for employee contribution, and employer contribution not taxable. Interest also not taxable. But at the time of receipt from the unrecognized provident fund, employee contribution not taxable. Interest on employee contribution taxable under income from other sources. Then employer contribution and interest on employer contribution will be taxable under the head income from salary. This is all about provident funds. And then there is a concept of superannuation fund. Superannuation fund, employee contribution not taxable. Employee contribution 80C, and employer contribution exempted up to 1,50,000. Interest exempted. Amount withdrawn also exempted. Then there is a limit. With effect from 1/4/2021. There is a limit on employee contribution. There is a limit on employee. I'm talking about employee contribution to recognized provident fund or superannuation. Statutory provident fund. If you contribute up to 2.5 lakhs, interest on such contribution is not taxable. If you contribute more than 2.5 lakhs to SPF or recognized provident fund, interest on excess contribution will be taxable. And there is no support from the employer, the entire amount contributed by employee only, then instead of 2.5 lakhs, we have to apply 5 lakhs limit. Okay, this will be applicable with effect from 1/4/2021. And there is a overall limit. There is a overall limit. Sir, what is the overall limit? So this limit is for an employer contribution. Aggregate employer contribution to RPF, superannuation fund, and NPS put together cannot exceed 7.5 lakhs. If you contribute more than 7.5 lakhs, that excess contributions will be taxable. More than 7.5 lakhs, excess contributions will be taxable. Interest on such excess contributions also taxable. So how to contribute that interest on excess contribution? There is a formula, that is a PC divided by 2. PC means excess contributions in current year divided by 2 into R, because on an average we will calculate, plus, and we have to compute interest on past year contributions also, na. PC1 plus TP1 into R. PC1 means old past year contributions, past year excess contributions. TP1 means past year excess interest on past year excess contributions into R. Samajh gaye? Yes. So by this we will complete. Then deductions. We have two regimes, guys. Under default tax regime, we have, under optional tax regime, you will get standard deduction, entertainment allowance, professional tax. But whereas default tax regime, only standard deduction, you will get 75,000. That's it under default tax regime. Coming to optional tax regime or normal tax regime, standard deduction 50,000. And entertainment allowance, first it is taxable under the first it is included in the gross salary, then you will get deduction for entertainment allowance only for government employees, maximum 5,000 actual, and formula 20% of basic. This is for entertainment. Professional tax, it is required to be paid by the employee. If it is paid by the employee, straight away you can claim deduction. If it is paid by the employer, so first it need to be added to the salary, then it will be allowed as a deduction. This is about professional tax. That's it. This is all about salary. A matter of 20 minutes. Okay.